How will inflation help? How would inflation help value stocks? How would inflation help value stocks? That's what we're going to talk about on this episode. We know that everybody's worried about inflation these days due to the stimulus checks being pumped out on top of low interest rates. But in this episode, you're going to learn a lot if you haven't done so already. So,
you're going to learn today.
Anyway, right here, we're going to talk about what is inflation, the Federal Reserve part of inflation, value stocks, growth stocks, and the discount cash flow. And at the end, we're going to give you a simple way to be able to invest into value stocks, and we're going to look up their performance. But ladies and gentlemen, if you haven't done so already, go ahead and make sure.
Hit the subscribe button, hit the bell icon, hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So let's jump straight into it. So, ladies and gentlemen, if you are catching this live, please go ahead and hit that comment button. Tell me where you're checking in from. But this is going to be kind of a quick episode. No, I'm trying to keep it around that 10-minute mark. So let's jump straight into it. I'm glad to be back here. So the first thing we're going to talk about, what is inflation? I'm going to take you from what is inflation to the Federal Reserve to value stocks. What if growth stocks? What are growth stocks? The discount cash flow, and then we're going to talk about how value stocks are being helped when inflation starts to rise, and we're going to talk about a way to invest into that for everybody that's out there. So you're going to get a lot in this episode. First is, what is inflation? Inflation is the rise in the cost of prices of goods and services. For prime example, when you go to get that loaf of bread or milk, the fastest one to move is always milk because it's a high volume item. So you can, you see the price of milk, bread, things like that it requires to live. Also houses, anything that you buy as the price rises, that's caused inflation. You always hear the old school people say, oh, I used to buy a Coca-Cola for a nickel when I was your age. But you're saying, no, now a can of Coca-Cola costs $1.25, right? So that's inflation, the price of goods and services that are going up. The price of gas starts to go up. It costs more to transport goods and services. So you kind of catch my drift is when you go to pay your money, how things go up. The Federal Reserve goal is to keep it at 2%, but we're going to get into that next. So now the Federal Reserve, how does it play a role in interest rates? The Federal Reserve plays a role in interest rates because, number one, the biggest tool that they have a plethora of tools. They can pump money into the stock market and they can control interest rates. That's the biggest thing there. That's why every time the Fed Chair Jerome Powell speaks every 3 months, everybody's on hinges and it decides where the market is going to go, hanging on to every word he says because he can control interest rates. As interest rates go up, it tightens up money and it brings down stocks. On the reverse end, as interest rates drop, it takes up the price of stocks and it makes money easy to borrow. So it has a lot. The interest rate that you have on your house is controlled. I won't say absolutely controlled, but it's heavily influenced by the Federal Reserve because they control the interest rates. The interest rates that you have on your credit card, everything that requires interest rates, it is tied to the Federal Reserve. That's why the Federal Reserve plays a major role in inflation. And their second job is to control inflation. Federal Reserve Chair Jerome Powell just said he wants to keep inflation no more than 2%. He wants it right at a little bit above 2%. And as long as it's at 2% or whatnot, he's not going to do anything. But as inflation starts to increase, he's going to increase interest rates to tighten up the money that's in circulation. So this is how the Federal Reserve, they have tools to influence inflation, right? The next thing we're going to get into, Prince, you said inflation is going to help value stocks. So first, let's talk about what are value stocks. Value stocks are stocks that are seen to be, they were coined. The earliest person I can see that we're talking about value stocks was Benjamin Graham in security analysis. He was the one that kind of the grandfather of value stocks. Then it was very popularized by Warren Buffett all the way into clocks today. These are stocks due to fundamental analysis. When you do fundamental analysis, they are below the price they should be trading for. So for prime example, let's take Apple, who has made $100 billion. They got a high cash flow or whatever the case may be. You do your fundamental analysis and you say, well, they are way below the price they should be trading at. These considered to be stocks that are undervalued. So you purchase undervalued stocks and then eventually the stock market will get it right. And these companies will go up in value over time based a lot of times on their cash flow or other fundamental analysis, depending on which formula you decide to use. Next, Prince, you said growth stocks. So growth stocks are stocks that are usually they could be unprofitable or have a very low cash flow, but they're looked to have to make a lot of money in the future. This is where you see a lot of tech companies. Notice you're seeing tech getting beat up in the first quarter of 2021 so far. Tech has been on a decline, and a major reason why tech has been on a decline is due to the fact of they are having you see interest rates are low, and people are anticipating inflation to go up. So when inflation goes up, growth stocks usually don't do well. They fundamentally they don't do well during growth times, because the reason why, we're going to get into the formula next. But as interest rates go up, as interest rates not interest rates, but as inflation increases, growth stocks decrease. As inflation increase for value stocks, their prices increase. So this is why you're seeing a lot of people move out of NASDAQ and move out of tech companies, and you're seeing them fall and falter, not fall, but their prices starting to decline. And you're seeing a lot of people going to traditional companies like restaurants and airlines and travel, these good old companies they think are undervalued. So as inflation increases, growth stocks will perform less and less, as value stocks will go up. So we've seen NASDAQ going down, Dow Jones going up, right? Things like Coca-Cola, consumer staples are going up. The next thing we're going to get into is the discounted cash flow, DCF formula. So I'm going to share my screen here. I don't know why I brought that one up. Y'all give me 1 second as I, let me stop that one. Let me bring it back. So here we go. I'm going to pull up the discount cash flow. So first we're going to talk about what is the discount cash flow formula. It is the evaluation method used to estimate the value of an investment based on its expected future cash flow. So for prime example, this is a formula that as the cash flow increases, the value of the investment increases. So people expect Tesla. They're not looking at Tesla today. They're looking at Tesla tomorrow. People are not looking at Google, a lot of tech companies, growth stocks. Because they're looking at their growth to be in the future. Versus something like McDonald's, they have a high cash flow currently. So with growth stocks, they're looking at this cash flow is going to increase more in the future, where we believe something like McDonald's is going to decrease in the future, right? So for prime example, you're looking at the formula right here on your right-hand side. DCF is discounted cash flow. They take in your cash flow period. They take in interest rates, and they take in years before future cash flow occurs. So, as inflation increases, interest rates will probably increase, because you heard Jerome Powell said as long as interest rates are at 2% and it's controllable, they're going to leave interest rates alone. But as you see inflation increase, so will interest rates. So when you look at this formula, the higher the interest rate is, you can see as interest rates go up, it's going to go down for growth stocks. So when you add in the cash flow, when you look at the cash flow of Tesla versus the cash flow of, let's say, Berkshire Hathaway may have a higher cash flow today, but they're going to expect that to decrease in the future. But people expect Tesla to grow in the future. So right now, when you look at the cash flow today, the value stocks are the ones that usually have a high cash flow present day. Growth stocks usually don't have a high cash flow present day because everybody expecting them to grow. So now as interest rates increase, which everybody's expecting inflation, and they're expecting interest rates to increase, they're looking at the value of growth stocks will decrease, but the value of value stocks will increase. Kind of makes sense? So now let's go back to this. Let's hit on one thing before we go a little bit deeper. The Federal Reserve, everybody's looking at them as contributing to the inflation, because guess what? They had March of last year to combat the pandemic. They lowered interest rates to an all-time low, and then interest rates are at 0 to 1.25, the lowest they've ever been. I don't think they really could lower them anymore, really. So they're as interest rates are so low, and they're pumping out stimulus checks. If you're handing out money, if you're handing out trillions of dollars with low interest rates, this is probably going to push up the demand for goods and services. And when the demand for goods and services go up and the supply stays the same, that's going to increase prices. When that increase prices, that's going to increase inflation. And once you increase inflation, then you can see the Federal Reserve start to come in with interest rates. So, ladies and gentlemen, now let's get down to the gym. All right, here we go. Now, Prince, you said a whole bunch of things. What is, you had me tuning in all this time. What does all this mean? Here it is, going to tie all together. So here's a value stock ETF. I'm going to choose one value stock ETF by Vanguard. This is called VOO. VOO. I don't know how it's called. VOOV. I think I said too many O's. VOOV. VOOV. So this is a value stock. Let me share my screen here and pull it up. And I'm going to pull up the performance of them compared so far this year. As you can look at this value stock ETF, you may be somebody that says, Prince, what does this value stock mean? So right here, let me pull it up. Y'all give me 1 second. Let me get my screen ready. I thought I had it already on here, but I'm going to walk y'all through it. Sorry about that. Let me get back to where I was. This is not where I want to be on my screen. But what I'm going to do is I'm going to pull up the value stock ETF VOOV. This is, there are plenty of value stocks ETFs that are out there, but I'm just going to pull up one that you guys and girls could use for yourself. So as I pull it up, let me share my screen again. So right now, this is the Vanguard Value ETF, right? So you look at the holdings that it has inside of it. Some of the holdings, some of the companies you may have heard of. These are the top 10 holdings of it. It has Berkshire Hathaway, which is Warren Buffett. Then it has JP Morgan Bank. Then it has Walt Disney, Bank of America, Johnson & Johnson, Intel, ExxonMobil, Verizon, AT&T, Chevron, all household names that they look at as being very cash flow heavy today. That's going to decrease tomorrow. So now let's look at their performance so far this year. When you look at the year-to-date chart that I have pulled up here, I already had it pulled up. The big blue line up under that is from January. This is going from December 30th all the way into present day. And the green line is the NASDAQ. The yellow line is the S&P 500. The orange line is the Dow. As you can see, this ETF so far this year has outperformed all major indexes. So as you can see, the lowest performing index is the NASDAQ that has majority of the growth stocks. And the highest performing index is the Dow Jones, which has most of the value stocks. So you have a value stock ETF that you could say, hey, for it's trading to, as of Friday, $135. $135. I think it pays a dividend. I have to double check on that. But you can see so far this year, it is outpacing all three of the major indexes because everybody's anticipating inflation and higher interest rates. And higher interest rates and inflation, this will send growth stocks down, but it will send value stocks up. So let's take a look right here. Does it pay? Yes, it does pay a yield. So it has a 2.18% yield. 30 days SEC. Okay, so it does pay a nice little dividend there, yield currently, and it's $135. So that's the gem for today. So now, ladies and gentlemen, that's going to conclude today's episode. I'm going to jump in the comment box to see what y'all are saying before I get up out of here, all right? Max B, what's going on? He's over there on Twitch. So if you haven't done so already, follow me on YouTube, Facebook, Twitch, all of the good stuff, and I definitely follow back. Here we go. Max B says, good afternoon, Prince. What's going on, Max B? Glad to see you in this episode. He said this should be a great episode. Hopefully it was, Max B. Hopefully it was a great episode. Oh, Miss Sip and Talk over there on Twitch says, good evening, Prince. South Carolina is in the house. Thank you for tuning in. Antonio, he's out there. Antoine, I got to say it right. What's going on, Antoine? He said, good evening, investing family. What's going on? Glad to see you here. Then we got KD on YouTube said, money printer go Gucci. All right. Got it. Brock Ian says, what stocks are included in the VOO? Hopefully you saw that. That was Berkshire Hathaway, the VOOV he's talking about. We kind of went through that one. So hopefully you got that. He put a thumbs up there. So Brock Ian says, Prince, are we in a bubble or don't fight the Fed? Me, so everybody understand, I'm a fundamentalist investor, and I'm a bull. I'm a bull fundamentalist, if that makes sense. A bull fundamentalist investor. I look at the fundamentals of companies. I'm very bullish. I'm very optimistic on the market. no, I do not believe we're in a bubble. It's hard. You don't know what a bubble is until it bursts. Made famous by Charlie Munger. Everybody's trying to anticipate a bubble, but you don't know when the bubble is or until it bursts. And it burst last year. Look at the Dow Jones had a big burst last year. I believe I don't want to make my 2008 mistake on replay in 2020. Meaning that in 2008, when the economy hit the bottom and I was just coming into investing in 2009, that would have been, we ran into a bull market from 2010 all the way to present day. And I was so anticipated that we were in a bubble that I didn't ride the bull. So I don't want to make that mistake again. The pandemic could have hit the reset button, could have gave us a correction that we need, and we might be in a bull market for the next 5 years. So I'm not smart enough to know when a bubble is, to know when we're in a bubble, or to know where we're in a trough. That's anticipating you can time the market, and that's something that unfortunately, Brock, I wish I was smart enough to realize, but as a president, I'm not. So Nicole Young, she said, hi, California. Hey, how you doing, Nicole Young? She said, are REITs, I think she meant REITs, RETIS, housing stock value stocks, are they worth investing with inflation? I think REITs, real estate investment trusts, I think that's what she was trying to say there. I think they're good if they're on residential housing, because a lot of them have a lot of commercial housing, things like that. But real estate is a great way to impact inflation as well. So if you have a REIT that's focused on residential housing, I would say yes. Or land and residential housing, I can see those prices going up. He said, Max B, you already know what my thought process is on SPXL. That's a triple leverage bullish ETF on the S&P 500. You got to be very careful how you buy it. You got to get in on certain days and get in. It's going to make your portfolio very volatile, but I believe over time you can win if you kind of know how to get in and get out. All right. Max B said, it was great. I'm caught up on what they have been talking about on CNBC. Got it. Glad I could help you out with that. Technical headlamp with the strap said, I had COO for a while. I got some GM this Friday. I wonder if that was a good play. I like GM. I definitely like GM. Lucky's mom. Hey, how you doing there, Lucky's mom out of Jacksonville? She said, great episode. Thanks, Prince. Anytime. And Brock N says, bear on the office REITs. You're right. Commercial real estate, I will be bearish on that because I think the pandemic has pushed us and showed us that we can operate without office space or very limited office space. So one of the last things I look at doing for myself is going to go get a big office and do the traditional thing. So a lot of people are working at home, BTCing, video conferences, Skype, Zoom, that type of thing. So that's my way of looking at it. So ladies and gentlemen, let me do a quick recap before I get out of here. So the quick recap, we talked about what inflation was. We talked about the Federal Reserve, how they contribute to inflation, and also how they have tools to control inflation. We looked at what is consistent of value stocks. What are value stocks, right? And then we looked at what are growth stocks. Why are growth stocks going? Why are they looking to contract as inflation increases, and why value stocks are looking to go up as inflation goes up. Then we looked at the discounted cash flow formula. The discounted cash flow formula is an investment. You don't have to go out here and have a calculator. You got so many apps out here and websites that if you punch the numbers in, it will tell you what the discounted cash flow is. And this is when investors try to figure out what the intrinsic value of a particular investment is. So as interest rates go up, the discounted cash flow decreases. And remember, I remember my first ever Warren Buffett meeting that I went to, and I saw him speak. Somebody asked him, if you could only have one thing in investing, what would it be? If you can only know one thing in the future of investing, what would it be? And he said interest rates. And my belief is he said interest rates due to discounted cash flow, because it's hard to anticipate what interest rates will be. So, and we talked about that. Then we looked at, hey, Prince, you said that inflation will go up. We looked to put our money where our mouth is, and we looked at how have value stocks been performing in 2020 versus all three of the major indexes. And you're looking at a lot of value stock ETFs are beating all three of the major indexes in the first quarter of 2021. But anyway, ladies and gentlemen, I do not own VOOV. I'm not trying to pump something up for some crazy reason. I may look to purchase it in the future, but it's a good way to add your portfolio to combat inflation and value stocks as they increase. Ladies and gentlemen, I hope you guys and girls enjoyed this episode. Until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe, peace, be safe. I'm out. Thank you.